Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Affirm. So Affirm just put out some really strong results and I want to talk about its results. I want to talk about its business's prospects over the near term. I want to talk about its valuation. So there's a lot to get through. Let's just get started. Interestingly, about 3 weeks ago I wrote about Affirm and I said that at this price point, and you can see the article on Seeking Alpha, at this price point, Affirm is more likely to see a 50% upside than downside, and we are likely to see over time at least 26 billion market cap. Now, I didn't expect that to happen overnight, I was kind of thinking in my mind, over the next year or so. Anyway, 3 weeks later, here we are. We're way just into that number now. So what's happened? So basically, they put out results. So the previous guidance, this is the important takeaway here. So the previous guidance for Q4 was approximately 47% year-over-year growth rates. When the results came out last night, it actually reported 71%. So it's a marked upside. You can see here that it's approximately 2,400 basis point upside to what they were talking about previously. Similarly, the guidance for Q1 is pointing towards 109% year-over-year growth rate. So remember, you can see here in the graph that Q1 was particularly strong at 98%. So it was the strongest quarter of the year, and this time around, against that heavy comp, they're coming in and they put in 109%. So they just basically exploded on the upside, and they're practically saying, okay, this doesn't even include Amazon. So forget Amazon, this is just pure play what we're going to grow in Q1. So this guidance right here of 40%, I'm just putting that aside. It's not even worth considering. Another thing, so they put out this guidance and they say, okay, listen, we're going to grow in the year at approximately 1.2 billion, and that's basically, they just literally took analyst consensus, put a tiny bit more, and then said, okay, we're going to kind of do a little bit better than that. But you can just push this out of the they're going to explode here. Another thing that I want to talk about is the way that you should think about Affirm. So Affirm, the buy now pay later solution, is they take the revenue, but there are costs, right? You have to take a provision for that. That means there's a certain amount of customers that are going to default, or this kind of costs associated with servicing that revenue stream, that gross merchandise volume. There's some costs associated with that, but what you want to see is that of the gross merchandise volume after the provision is taken, you want to see this line here going up and to the right over time. And that's exactly what you see here. So it shows that Affirm's business model is working. So another big thing, so that was number one. Number two thing that I think is really interesting is that we can see here, right? So the number of active customers last year in the same period, apologize for that, was up 77%, okay? So last year, starting from a smaller base, they were up 77% year over year, okay? And this year, despite having to work off a larger base, is close to doubled. So it shows that this whole buy now pay later solution, even though you got the likes of, let's say, Klarna, you got Square coming into it now after they acquired Afterpay, you got PayPal in there. Even though there's all this different dynamic, you have to see that the numbers when they came out actually doubled. So customers are just salivating over this consumers are just kind of salivating and taking this on board. I don't even want to mention about the number of merchants that was up 5 times year over year. Everyone's going to be taking up this solution. So they partnered up with Shopify on an exclusive basis, and the big takeaway was that on a non-exclusive basis they're rolling out their partnership with Amazon. So if Amazon puts that little thing, is a very much a strong customer acquisition tool for Affirm, and Amazon obviously wants as much dominance as possible in this space, and they don't want Apple to start taking, Amazon will do whatever it takes to push Apple aside. So everyone was considering, Apple's coming out and partnering up with Goldman Sachs, and the Apple Pay is going to take over Affirm, and Amazon doesn't want that. So it's in Amazon's interest, it's in Affirm's interest that Apple doesn't get any mind share here. So the one negative that I wanted to highlight is that adjusted operating margins, they were coming up, they were improving, so they were turning some profitability, but now for the year ahead, they're going to come back down, and they're actually guiding for negative 11% operating margin. So they were coming up in our profitability, but now they're going to go back down. So, but I think that investors are saying, like, we're not worried about the profitability. We know you can do it, and we just want to see you taking mind share. We want to see you growing this buy now, pay later, taking market share, and we want to see your revenues growing. So I talked about you could welcome to pause the video, read the article, and I don't want to spend too much time going over this, but I suspect that we can get Affirm growing its top line much higher than the 1.2 billion that they're guiding for. I think that we can get it close to 1.6 billion. What that means in practice, even if we take the 290 million shares outstanding for the year, we're talking about the market cap right now. So the share price right now is 112. So we're talking about a company priced at 32 billion once we account for all those shares outstanding that are going to come in. So 32 billion. If you think about it, if you say, okay, yeah, they're going to continue that exit rate of 109% for the first quarter, they're going to, for the year, we're talking about 1.6 billion probably for the revenues to come in at. So that puts a stock right now, including the 32 billion markup, at approximately 20x forward sales. So you're pricing Affirm at 20 times an aggressive growth rate. Now, I'm a value investor, so I'm not going to say that's particularly cheap. I'm not going to stand around here and pretending that's a cheap valuation. It's not a cheap valuation. But if you buy into this buy now, pay later solution and you want to side yourself with the market leader, there is a reasonable argument here that this is attractively priced. So anyway, if you want to find out what kind of stocks I'm into, don't forget to check out my marketplace. It's called Deep Value Returns. I'll tell you the stocks I own and why, and you're welcome to do a totally free trial, and you're welcome to see if it suits you and chat to people in the investment community. We're growing value investor community, and if it doesn't work out for you, you're welcome to unsubscribe anytime before the 14 days, and you're not going to get charged anything at all. Okay, see you next time.